Global markets traded mixed on Wednesday, with Pakistan's stock market rallying sharply while U.S. futures slipped ahead of key central bank remarks and oil prices remained under pressure. The Pakistan Stock Exchange began the first trading session of the new fiscal year on a strong note. The benchmark KSE-100 Index gained 3,748 points, or 2.08%, to close at 184,050. The index stayed in positive territory throughout the session after touching an intraday low of 180,565 in early trading. The rally came a day after the market recovered above the 180,000-point mark to end fiscal year 2025-26 on a strong footing. During the outgoing fiscal year, the KSE-100 delivered a 44% return in rupee terms and a 46% return in dollar terms, rising from 125,627 points to 180,302. According to AKD Securities Director of Research Awais Ashraf, investor confidence was driven by lower-than-expected inflation figures for June. Pakistan's Consumer Price Index rose 11.1% year-on-year in June, easing from 11.7% in May and remaining within the government's forecast range of 11% to 12%. On a month-on-month basis, inflation fell 0.3% in June, compared with a 0.5% increase in May. Ashraf said the latest inflation data reinforced expectations that inflationary pressures are continuing to ease, strengthening hopes of monetary easing. He added that inflation is expected to remain within the State Bank of Pakistan's target range in fiscal year 2026-27 due to lower oil prices following the temporary settlement between the United States and Iran. Analysts believe the KSE-100 index could move toward its all-time high of 189,000, with lower oil prices, expectations of policy rate cuts, inflation data, monetary policy signals and geopolitical developments remaining key drivers for the market. Meanwhile, U.S. stock futures edged lower as investors awaited comments from Federal Reserve Chairman Kevin Warsh during a panel discussion with the heads of the European Central Bank, the Bank of England and the Bank of Canada. Market participants were expected to closely watch his remarks for clues on the future path of U.S. interest rates. U.S. Treasury yields continued to rise after stronger-than-expected U.S. job openings data strengthened the case for higher interest rates. In the commodities market, Brent crude held below $73 a barrel after President Donald Trump reportedly told aides he was comfortable with negotiations with Tehran continuing beyond the August 18 deadline, boosting hopes that hostilities in the Middle East would not flare up again. Gold prices slipped amid expectations of higher interest rates, while currency markets remained focused on the Japanese yen, which fell to a fresh 40-year low against the US dollar, raising concerns about the possibility of intervention by Japanese authorities.